Yo guys, what's going on? It's Lewis here, and we're gonna go over week 6 of the trading versus dollar cost averaging competition that I am doing with myself in this video. If you aren't aware, I am doing this challenge. It's the trading versus DCA challenge. DCA stands for dollar cost averaging, and what that is simply putting in a set amount of money every single week into a particular asset. Sorry, I couldn't get that out. But basically, I'm putting a certain amount of money into Bitcoin every single week, and I am comparing that to my trading account. And I actually updated the chart or the Excel sheets with some more really interesting and fun info for you guys. And it's sort of sad right now because my dollar cost averaging account is doing better than my trading account. Just a spoiler alert for you right there. We're gonna go over that, and then I'm gonna go over cryptocurrency, a few things that are happening in the cryptocurrency space that are really exciting. And I'm gonna announce the winner. So I'll announce the winner of last week's competition. Just in case you didn't know, I do have a trading group, and so I give away a free 3-month trial to the trading group to one person who likes this video, subscribes to my YouTube channel, and then likes and subscribes and follows me on Instagram and TikTok and Twitter, and who does all of that and likes and subscribes and follows on all the accounts for my glasses company, Cryptorays. Quick shout out to Cryptorays, blue blocking glasses. Check it out. This is my box. Got all the cryptocurrencies in here. I think it's awesome to have a physical product and help bring cryptocurrency mainstream. You get this cool case and a whole bunch of stuff in there. So check it out, getcryptorays.com, and get yourself a pair of blue blocking glasses, because obviously we all know that we need them. I was on my market update video. I spent about 12 hours on it yesterday in front of my computer right over there. So yeah, getcryptorays.com. If you don't have a pair of blue blocking glasses, then definitely get a pair of Cryptorays. They're super high quality blue blocking glasses, and they help protect your eyes, improve your sleep, improve your focus, productivity, so much stuff. Love them, and they're the best. And now that that's out of the way, let's get into the numbers of week 6 of the trading versus dollar cost averaging account challenge. Okay, so if you've been following me from the start, I started this challenge October 5th, 2020. And I started this challenge with $77,761 in my trading account. That's my overall trading portfolio. For my dollar cost averaging account, I didn't start with anything and I was just averaging in every single week. However, I did put in the Excel sheet a new category, which is if I would have just put $77,761 in from the start just into Bitcoin and just left it there, how much I would be up right now. And I gotta tell you, it's a little bit depressing seeing this number right now, but this is for the long term, and I know that my trading portfolio will, I hope that it will outperform just hodling Bitcoin, because we've all seen what hodling Bitcoin could do in the bear markets. And we all know that altcoins can and will surge way higher percentage-wise than Bitcoin will eventually. And also, the other thing I want to say is that I did start this October 5th. And if you are in the cryptocurrency markets, you will know that October was an absolute horrible month, or yeah, for altcoins. The alt season was tremendous in June, July. In July and August and September, we had a huge alt season that went up like crazy, hundreds of percentages. I did very well in July and August and September, and then October, you give a lot back, but still remain profitable overall when the market turns against you. And this week is really exciting because we're actually just now starting to have another mini alt season or alt rally. So hopefully next week, my trading account will be up even more. And so like I said, I started out my account with $77,761. My current balance is $86,146, and that leaves me a percentage gain from the start in my trading account of 10.78%, which is not too shabby for just about a month. But what about my dollar cost averaging account? Well, from October 5th, if you were to just dollar cost average into Bitcoin every single week without fail, you'd be up 23 0.97%. So in the past 6 weeks, my dollar cost averaging portfolio outperformed my trading portfolio by more than double. But the real shocker is how much I would have earned if I would have went all into Bitcoin just from the start with the same amount that I started out in my trading portfolio. So what I did was I found a site that has a Bitcoin return calculator on it. And what you could do is you could input the amount of money that you would have put in at what date, and it gives you how much money that would be right now and the percentage gain. And if I would have just put all of my trading capital directly into Bitcoin at the very start of this challenge, I would have made over 42%, 42.26% to be exact. And that would have put my trading portfolio at $110,622. Regardless, I'm still not too worried about that because I have my HODL long-term portfolio of Bitcoin and Ethereum. I have my dollar cost averaging portfolio, and I have my trading accounts. So I have a bunch of different accounts, and maybe I'll actually make a video on the different portfolios and different accounts that I have and the reasons behind them in another video. If you want to see that video, if you're watching this one, just let me know below that you want to see all of the different portfolio accounts videos, and I'll make that for you. And even after saying that my dollar cost averaging portfolio has more than doubled the percentage returns of my trading portfolio after 6 weeks, my trading portfolio has still done better than it's ever done before in this challenge. Because in week 3, it was at 10.7%, and now it's at 10.78%. And like I said before, with this new altcoin rally happening, it's gonna be a lot of fun, and we're gonna see what it's like for week 7. I'm really excited about that. And with that out of the way, I think we should check the winner. So let me just log into my Instagram and see who messaged me their YouTube, Twitter, TikTok, and Instagram handles. And we got hustler.786. So YouTube, the hustling guy, congratulations. I will contact you on Instagram. I'll reply to your DM on Instagram. You'll get a code that will give you 3 months access to the trading platform and the Crypto Elite community. And for everyone else, if you want to enter and get that 3-month code into the Trading Crypto Elite community in the Discord, then I'll put a link in the description that you could just click on that and it'll tell you what to do. Even though I already described it earlier in the video. And the last thing that I want to do is talk about some exciting news that's happening in the crypto space, and then actually dive into the charts just for like 2 minutes and just talk about what I believe is are the most important things that are happening when it comes to cryptocurrency right now. So there is actually not a ridiculous amount of news, but there are some things I want to go over. The first thing is that Fidelity Investments applies its proven Peter Juber to its unproven Bitcoin unit as and it launches the Fidelity Digital Funds. Basically a fund for digital assets for Bitcoin, pretty much. And this guy right here, Peter Juber or Jubber, I'm not really exactly sure his name, how to pronounce it. He has over 14 years of experience in the, or 18 years of within Fidelity. So he's going to lead the Fidelity Bitcoin Fund, which is like crazy. And Fidelity has over $8 trillion under management. So the fact that they're putting this guy, he's an 18-year veteran in Fidelity, along with a lot of their just top talent into this Bitcoin fund, shows that they are extremely serious about Bitcoin. And I mean, if Fidelity is this serious about it, then you know that it's a serious thing to get into. So that was number 1. Number 2 sort of goes with that, which is that Fidelity acquired a 10% stake in a Bitcoin mining firm, which once again is just like sort of ridiculous that it's, you know, doing that. And apparently it's been working on this for 6 years and has been mining the cryptocurrency Bitcoin for 6 years. So such a long time. Binance has begun to block US users from accessing its exchange. So basically, it sent out an email the other day to a lot of people saying that they need to withdraw their funds within 90 days if they're based in the US. And this is sort of a big deal because Binance is the #1 exchange for cryptocurrencies, and they have a lot of cryptocurrencies on there. That's where I do most of my trading. So going to have to change to a different exchange if this is serious. And basically they're blocking US users now from accessing the platform. And this is basically because BitMEX, which is another really large exchange, or it used to be a large exchange, basically just got a lawsuit from the SEC and had to shut down or get rid of all US customers. So Binance is going to do the same as well, and Binance US is launched, so you could always go to Binance US. What I did though is I looked at, going back here, Gemini, and Gemini has a lot of tokens, and they have all of these tokens: Balancer, Curve, Ren, Synthetics Network, UMA, Uniswap, Yearn Finance, and all of these other ones, along with a few others. So I created a list and I put these into my TradingView account so that I can look at these coins first and everything that's traded on Gemini first, and Coinbase as well, so that I could trade the most reputable exchanges, the coins that are on the US based reputable exchanges. And I think that that would be a really good idea for everyone to do. So all of these coins are good to continue to trade, in my opinion. Then there is Deribit. Okay, so same thing. Deribit's going to mandate ID verification for all traders because they're going to do the same thing that Binance is doing and make sure that no one from the US is trading because of the laws that the US has. Also, JP Morgan. So we just talked about Fidelity. Well, there's also JP Morgan, a new model for innovation in financial systems from JP Morgan, 5 years in the making. So JP Morgan is creating a digital assets firm, and apparently it's 5 years in the 5 years in the making. And this is from, Jamie Dimon, just 2 years ago he was calling Bitcoin a fraud and all this other stuff. So they are creating a blockchain based network. And yeah, this is sort of a big deal. Blockchain, Bitcoin, cryptocurrencies, they're really basically coming everywhere. And it's just more reason to just dollar cost average into Bitcoin and get more Bitcoin. Finally, huge news is Ethereum. So Ethereum 2.0 is coming out. So Ethereum, upgrading Ethereum to radical new heights. Ethereum, we know and love, just more scalable, more secure, and more sustainable. So Ethereum 2.0 is coming out. It's going to be huge. So basically, what is ETH 2.0? Well, ETH 2.0 refers to a set of interconnected upgrades that will make Ethereum more scalable, more secure, and more sustainable. These upgrades are being built by multiple teams across the Ethereum ecosystem. You don't really need to do anything if you hold Ethereum. It's really cool, but ETH 2.0 is supposed to be a lot more scalable, support thousands of transactions per second, make it faster, make it cheaper to use. It's supposed to be more secure and more sustainable. So that's really, really cool for ETH 2.0. It's coming out, and the Beacon Chain, this is the important part, the first ETH 2.0 addition to the ecosystem is Beacon Chain, and that's supposed to coordinate the new system and bring staking to Ethereum and lay the groundwork for future upgrades. And if you go down here, you could stake your Ethereum, and it says when will ETH 2.0 ship, and the Beacon Chain, you click on that, December 1st. It is November right now, so ETH 2.0 is supposed to come out very, very, very soon, in just a few weeks, or at least the first iteration. Beacon Chain is supposed to come out December 1st, and that's a huge deal. However, I don't think that this is just a call to just jump on into Ethereum right now. I'm going to talk about where Ethereum and Bitcoin and total market cap is right now, and it's at a pretty big resistance, so I'm pretty weary of jumping into coins right now, and I'll get to that in a second. Finally, one of the last things is that PayPal says that it's opening up crypto services to all eligible US users. This is huge, huge, huge news. PayPal is obviously, it's ridiculously big. Everyone knows about PayPal. It's used all over the world, and e-commerce stores use it. So they're going to implement their Bitcoin and cryptocurrency basically services to people this week, and they actually said that due to initial demand from our customers, we've also increased our weekly cryptocurrency purchases limit from 10,000 a week to 20,000 a week. And from everything that I've heard, PayPal really just overperformed when it came to the cryptocurrency platform that they're rolling out. And it says PayPal CEO remarked about the payments company newly unveiled crypto offering during its Q3 earnings call on Monday, and highlighted how the firm intends to add more digital currencies to the future. In the future. He added that the waiting list demand was 2 or 3 times what our expectations were, which is huge, huge demand for cryptocurrencies. And heading into the charts here, I just want to provide some caution for the market, because if you take the Fibonacci from the top to the bottom, you could see that these Fibonacci levels have been respected very, very, very well. On the run up, we hit the 38.2, and then we had our big crash. Or if you want to take the wick, we hit the 50 on the mark and then had the big crash. And then we came all the way back up, hit the 50 on the mark again, and then crashed. And now we're at the 61.8. So this is definitely the biggest resistance, in my opinion, that Bitcoin has, or that the cryptocurrency market as a whole has, is the 61.8 Fibonacci retracement from the move down that we experienced during the bear market, because 61.8 is the Fibonacci golden ratio. So just because of this, I am taking profits on a lot of coins, because I do think that this level is highly significant, and I believe that the market as a whole will experience a pullback from this level. If I do this and go to the daily charts, and I go like this, then you could see where we are, and it's basically right here at this previous high of this particular dead cat bounce. Lots of support was here, so now I'm sure there's lots of resistance. So really anywhere in this zone between 460 and 465, 470 is a pretty good area for a pullback within the entire crypto market. So I'm just being pretty darn cautious around this area. So if we go to Bitcoin itself and we plot it from the top to the bottom, the Fibonacci, and we get the horizontal lines, here's the 61.8, and you can see the 61.8 was a huge resistance for Bitcoin. In fact, that was the high of 2019, and I was actually able to sell here because of the 61.8, because it works out so well. Even just around the 38.2 was a pretty healthy like pullback, right? But we're now at the 61.8 Fibonacci level for the total market cap, and I mean that's a little worrisome. So I'm going to be taking off, scaling out a little bit of my Bitcoin position over here, and I'll try to get in somewhere maybe whenever we pull back. Around a 30% is the average of the pullback. So if we get a pullback, that's what I'm going to be looking for. It's probably going to be somewhere around 11,500 area. But to be honest, because this is so good, this is a pretty good area. 13.3 is probably a pretty solid area to stack in a lot of Bitcoin if we fall down there, and then follow that up with a lot more if we fall down to 12 or just above 12. So that's just what I'm thinking right now. Oh, and if we actually go to Ethereum as well, you can plot out Ethereum and see basically the same thing. Take the Fibonacci. Ethereum, you have to do it on the weekly. So let me just do this real quickly. Ethereum, you take the Fibonacci from the top to the bottom, and you can see that we hit the, bring this up real quick. You can see that we hit the 23.6 right here. That was the 2019 top before it fell. And now we're at the very close to 38.2. So I expect Ethereum to, jump up to around 500, but the 38.2 is very significant, as well as the 61.8 for Ethereum. So I would expect either a drop from the 38.2 from around 500 to 515 all the way down to maybe like 400 area, or I would expect a consolidation right underneath 500 before a move up, and potentially all the way up to 780, somewhere around that region. So those are just a few things. I'm just like saying, be cautious with this. A lot of alts just are not really looking good. Even if we go to total 2, this is the alt, the alt coins. They're at a pretty big resistance right now for the total market cap. We could even go to Bitcoin dominance. Do the Fibonacci from the top to the bottom. 61.8 was the last thing. So I could see Bitcoin dominance rising up, a little bit more to the 61.8 to 72 once again before falling. So it's just like Bitcoin might be the best bet. It seems like it's the best bet. Bitcoin and Ethereum, but once Bitcoin reaches 72% in the dominance, like I will be taking out most of my Bitcoin and going into Ethereum. And if you want more details like around my theories and stuff like that, I break it down in my market update videos, which you could click on my other videos in my YouTube channel and you could see them. But yeah, I don't know. It's just things are getting pretty close for the total market cap to that. I mean, it is at that 61.8 level. And Ethereum is at that big resistance right now. Just a little bit more to go. So I'm short term bullish, just like for a tiny bit more of a movement up, maybe 17K. But then I'm ready to take profits, So just wanted to put that out there. And I'm going to end this video with a couple of wins from the Crypto Elite group. Over the last couple days in November, we've had a lot of wins, or 3 wins. And so what I do is I post these in the VIP alt signal group, right? Or I, set alerts, or I have my ideal buy zones, and I have all of the different charts for the different coins with the ideal buy zones in them. And basically I say, hey, I'm buying here, I'm selling here, this is my stop loss. And I give the reasons why. And I mean, we got in and boom, that was 13% right there for comp. And then I had this from October 19th, was this chart. And this was my stack 1. So we got in right here. And this was, and then I took profits up here at the resistance, right around here at the resistance, which was a very, very nice gain for band. And then of course there was Uni. And Uni, I used Fibonacci. I took the Fibonacci from the bottom to the top, and this was the 78.6. This was such a ridiculous run up, so I did it from 78.6, and I said, good level to stack in. This is the resistance, so you would buy here and you would sell here, and there you go. So we got a really, really nice gain with that, and of course, if you held on, then, you're up even more. So yeah, we've just been having pretty good wins over the past few days, or the past month, I guess, in November, since November started. And I don't know how much longer this is going to go on for. I sort of think that these are just dead cat bounces and they're going to start coming back down. But either way, I'm glad with the wins that we've been experiencing so far, and I post them in the winning trades group. We get a lot of good stuff. So I'm going to end this video here, and I'll see you in the next one.